Welcome everyone. I did a YouTube short on bullish haramis, and so then I got a request to do one on bearish haramis, and so that's what this pattern is right here. So let's talk about them. How do we identify them? What's kind of the thought process behind them? What nuances do we need to understand about them? And so let's dive right into that. Make sure we get it. So the first thing we need to do with this and basically any candle pattern is identify support and resistance. Now, a bearish harami is in fact a bearish pattern, so we look for a resistance area first. And then what we'd be looking for is price action to be running up to that resistance area with a big, large green candle, a bullish candle, maybe very little wick on the sides of it, or top and bottom, and just saying the bulls are large and in charge. They're in control. Everything's looking good. And then, but what happens is that it gaps down the next day, and you have this small kind of a smaller candle inside the range of the open and close of the bullish candle. And so what this really means from a psychological standpoint is that the bulls were very decisive, but now they're not as decisive, right? They're kind of indecisive. And so it's showing a lack of conviction on the part of the bulls. And then we'd be looking for it to continue on lower, maybe a day after that or something shortly thereafter to continue with that downward pressure. So that's the idea behind it, all right? Now, of course, sometimes they're picture perfect and sometimes they're not, right? Like this one right here, you can see we have some resistance in there. You can see the past levels where it's run up to this level, about 357. Here it is, large bullish candle, and then that inside, and that's not inside day because it'd be green if it's inside, but this is basically a bearish harami where we have that indecisiveness on the bulls, and then the bears are taking back control and send it back down. Now, this can often be confused with another candlestick formation that's somewhat similar. This is called a dark cloud cover. Now, the difference here on the dark cloud cover, if we can zoom in on this, is on this one, what happens is it runs up to that resistance. You can see the large bullish candle, but it gaps up and then drops down. Now, ideally, this would drop down at least halfway through the bullish candle and basically saying the bulls pushed as high as they could, but couldn't hold it, and the bears took it back. And so very similar, it's just shifted a little bit higher, and it's not encompassed by the high and low of the bullish candle on that one. And so it's a slightly different pattern, but understand they can be very similar and they can mean the same thing. All right. And sometimes you'll see it like this, where the candlestick formation will actually have, a longer wick. Now, ideally, it's kind of a small one. Everything's contained inside the body of the large green one. But again, you can see some of the variations of this as we explore some of those candle patterns and how they play out. So, keep an eye out for those. See if you can identify them out there in the market. But remember, support resistance first, then look for the candlestick pattern and possibly confirmation on that by a following day. Hope that helps.